Welcome, ladies and gentlemen. Second day PDAC here with Commodity TV, and I have the pleasure and honor to talk to Tim Clark, the CEO of Fury Gold Mines. Tim, thank you for your time.
Mark, it's great to be here. It's good to see you over here in this side of the ocean for a change.
It's really cold outside, but here it's nice. What do you think about the conference now?
This conference is awesome, and it's been amazing. But the amount of people here, I don't think investors who haven't been here understand. I believe the number's like 33,000 people.
Yeah, I've heard something else. So record numbers over 35,000 people. That's amazing.
It's amazing.
But you can see the interest.
Also, this is what happens when you hit 5,000 plus gold, or 5,400 almost today.
Yeah, and it's better to have more assets than just one.
Right.
And you are a multi-asset gold company, so it's a great story. You have been very, very busy. So just give us an overview about the last couple of months.
Well, I think the unique part about Fury is you don't typically have a junior with as many assets or as large a land packages, and it's going to pay dividends in a growing upside market. And so after we did the PEA in September, a lot of investors have wanted to know what we've been doing for this year.
Yep.
We raised $18.5 million of flow-through money in September, and so we started putting that to use, and we set up a 13,000 meter program starting in November, and we paused for 3 weeks for Christmas, but we're still drilling.
Okay.
We're about 11,000 meters right now. We should get to 13 in sort of mid-March, and then we're going to pause and let the assay labs catch up and put out some news. But at the same time, and I think I'm a little more equally excited at this, is we've kind of decided we're going to go for the full feasibility, and we're actively looking to hire people like a mine project manager, permitting people, and we're buffing out the company and planning to spend a lot more money in 2026. In addition, we also brought in Phil Baker to our board about a month ago. And for those who don't know Phil Baker, he was the CEO of Hecla for 23 years. He took that company from 100 million market cap to what, 5 to 7 billion?
Yeah. It's always good to have such experienced people in your management.
It's especially now because we have a real resource and we have real money. And so Phil came with me to the Bank of Montreal conference down in Miami a week ago, which is the preeminent institutional conference. And people would ask him why he came, and he's like, look, you don't have too many juniors with a land package like we have next to a big operating mine, and we have a lot of money.
100%. How was it at BMO?
Euphoria is how I describe it.
Really?
So I've been going there for 15 years. Every year, the miners love to sob, they love to bitch, and but the truth is, every time you walked up to someone and said, how you doing? And they were kind of like, well, everything's great.
Of course. Gold prices, 5,000.
I think what investors should expect on the back end of BMO is typically a lot of M&A.
Yeah.
That's what they're known for, and I'd be shocked if there wasn't a lot of M&A coming at all levels.
So you mentioned M&A. That's a perfect point, because of course you see the big ones are taking over the smaller ones or something, but where are we standing now in the cycle?
So I think it's early days for the juniors still. The money went into gold, then it went in producers, including the mid caps and the large cap. The large caps are going to start coming out in the first quarter with incredible cash flow that people don't realize. And when I talk to some of the big companies, they told me their average costs are like $1,200. You can do the math. And then what happens next is inflation will catch up in the industry. So what you do as a larger company is you acquire districts, not just projects. So you keep it one road, one airport, one mill, not multiple, and that makes you money longer term.
Sure.
So my rule of thumb was about 18 months after you see the peak of the producers, that's when it starts rolling into the juniors.
Yeah.
And right now the flavor of the day is investors are looking for development companies, and we're about to move into the development stage. And so it bodes well for us.
100%. And what makes you very unique is location. So Eleanor Mine was former from Newmont. Now it got sold. So what's going on in your area there in Quebec?
Well, it's interesting because the Eleanor mine is about 57 kilometers to the north, not very far. It's running at about a third capacity, and it's a group called Dilmar Group out of Indonesia, and they're looking to be a private company, but they're spending a lot of money refurbishing that mill and putting in a lot more money than I was expecting, and a lot more than most investors. So people who don't know Dilmar should understand they're a real producer, and they're going to get bigger. The other part of it is Sirios has been a company that's been it borders our Eleanor South property there.
On the eastern part,
It's
right?
basically on the east, and Dilmar's on the west. And recently they did a deal with a group that was backed by those Cisco guys, and Sean Rusin is going on the board. And when that was announced, the stock went up 400%, I believe, in December. And we were the largest shareholders. We own over 28 million shares. So that was a big win for us. And it's exciting because you now have almost a second producer in the area where even 6 months or a year ago, there were none. And I think that's why the James Bay companies have lagged and where they're going to catch up.
100%. Do you want to see, or do you want to show more ounces in these areas?
So the goal here is to drill. We've got to spend all this flow through money, and so we're going to be drilling all year. And the focus is going to be on Eau Claire. We will go back to Committee Bay because we have Agnico backing us, and they helped us airlift a lot of the fuel up there. So we got to go back and do another project like we did last year. And there's a lot more land to explore. And then at the same time, we're debating what to do with Sakami, which is north of Eleanor. But we put out a resource of 825,000 ounces in November, and people don't realize that's an open pit, and that could be another source of ore for these bigger programs. Yeah,
100%.
Hub and spoke. Yep,
100%. And about your share structure, so. Last time we talked together was your share structure had also some shares of Dolly Varden. So and now is this merger with Contango Ore.
Yep.
How's the situation there, and how does it go with you?
It's sort of interesting because Dolly Varden was viewed as a big chunk of equity of another company that would be hard to monetize. But we've been able to monetize and clip coupons over the year. But the change is that once the Contango deal goes through, not only does our legend come off our shares, so we can go free trading, but the other part is the liquidity goes up from about $1 million a day to $10 million a day. And so now if we chose to, we could get off of it pretty quickly. And Hecla was the other owner of those shares, and I believe they're almost off. So the overhang is going away on Dolly, and they're going to be merging with a producer. I think that company, when it all said and done, is going to be over $1 billion. They're going to kill it. I'm on the board to be fair, so I'm optimistic. But it's only going to get better for Fury.
100%. So you have shares in Dolly Varden still. You have the shares from Sirius.
Yep.
Are you happy with your valuation yet?
No. No, hey, listen, I think the rule of thumb is no junior is ever happy with the valuation, but if you actually look at the ounces in the ground, we're trading way below. A lot of our competitors are up 400, 500%. We've moved up, but remember, I came on to Fury 5 years ago at 95 cents. We're at about $1, and we've incrementally improved this company, and gold went from 1,600 to 5,400. Don't tell me there's no value in Fury stocks.
There is 100%.
And we're, in my view, extremely well positioned to really run up this year. We're the next leg in my feeling.
100%. So where do you see your next catalyst for the next 3 to 6 months?
Well, the next catalyst will be drilling results that are going to start to come out. And also, as we go through the full feasibility sort of work, you're going to see news out on permitting, and you're going to see news out on geological studies and things like environmental studies. So as we begin to get to that program, and remember, the PEA was only at $2,400 gold. And when I sat down with Bank of Montreal at BMO, they told me we should have used $3,500 gold now. And so that's going to be a huge lift as we show potential for the resource to expand, because just raising the gold price will add ounces into the resource on top of all our drilling. And so only 800,000 reported to the PEA, where we're hoping by the end of the year, a lot more ounces go into that economic sort of review.
Perfect. And then you will see also the success on your share price.
Yeah, it should absolutely be there. And I personally think this gold price is going a lot higher. It's not because of Iran, it's because of the macro call in the world. And that's not changing anytime soon. And that's why we're all here and why gold price is where it is.
100%. Everybody's looking for safe haven.
Yeah.
And good jurisdictions, and you are right in the middle of the best jurisdictions in the world.
We're as well positioned as I think we've been in 5 years, so we're excited.
Perfect.
Yeah.
Keep going, Tim. Thank you very much for your time.
Always good to see you, Mark.
And looking forward for the next interview together.
Excellent.
Thank you very much. Yeah, ladies and gentlemen, that was Tim Clark, the CEO of Fury Gold Mines, and you heard it. The company is way too cheap, but they have done so much good work. They have the best projects in the best jurisdictions. So check out the company, and bye-bye here from Toronto.